Hello, in this video I want to pass with you International Bookkeeping Test, Double Entry Bookkeeping, and Chapter 3. Which of the following statements are correct? To increase an expenses you record a debit, this is correct. To increase capital you record a debit, this is wrong. And to decrease an asset you record a credit, this is also correct. So we choose answer A. Next question. A business has a positive cash balance. Will this be shown as a debit or credit in the bank ledger account? It will be debit. Next question. To record a credit sale, which of the following would be the correct double entry? So let's consider what are booking entries, accounting entries for credit sales. So we can choose answer C. Next question. A business has a draft profit per its profit and loss statement. It has yet to record the journal for closing inventory. So what is accounting equation for closing inventory and cost of sales? I already prepared it and let's just post it. So as you can see, our closing inventory reduces cost of sales, and this will increase our profit. Next question. A credit balance on a ledger account means an asset or drawing, a liability or income, so we choose answer B, because it's increased by credit. Next question. Which of these best explains gross profit? So what are items we use in statement of profit and loss to show gross profit? First, it's our sales, then cost of sales, and after subtracting our cost of sales, we receive gross profit. Cost of sales may be also considered as purchases, so we can choose answer D. Next question. Bob used the following balances to prepare his accounts as at 30th April 2015. The business does not hold inventory, no further adjustment were required. What is Bob's closing capital figure as at 30th April 2015? So let's prepare Bob's profit and loss statement from these numbers. Here is sales, cost of sales, and our gross profit will be the difference, and also other expenses such as rent, bank interest, and heat and light. If we sum up it, we got the result of financial statement. There would be loss. And let's write accounting equation for closing capital. It's opening capital plus capital introduced plus profit minus drawings. And let's summarize our numbers. We had no capital introduced, so we put 0. And here is our closing capital, 500, answer D. Next question, fill in the gaps to show the double entry to record goods returned by credit customer from the options below. So what is double entries for credit sales? And when we are talking about returns, the double entries would be reversed. So we use debit for sales returns and credit for trade receivable. Well, next question, fill in the double entry for the owner of the business, taking out cash of 5,000 from the business using the options below. So it would be debit drawings and credit bank and cash. Next question, fill in the gaps to show the double entry when the owner of a business takes inventory worth 500 for personal use, assuming the business uses the period end method for accounting for inventory using the options below. So we write debit purchases and credit inventory. Next question. Rose is a sole trader. She makes a sales to Jane on credit, which Jane is to pay for in 1 month's time. She makes a sale to Ben for cash. So what would be the entries? We put sales for credit and debit for trade receivables and also debit for cash. Next question. He is also a sole trader and he has just bought a van for cash. So we use fixed asset for debit and cash for credit. James is also a sole trader. He has just purchased some good from Lydia on credit. So we put debit for purchases and credit for trade payables, because the purchase was made on credit. Next question. Tali is a sole trader. She has carried out a number of transactions this year. Ignoring the cash elements of the transactions and any goods, she still has the year-end indicate where each of the items will be shown in her accounts at the end of the year. So she has bought a van for use in the business, so it's statement of financial position because it's fixed asset. It will be used for more than 1 year. Bought goods to sell is profit and loss statement. Sold goods is also profit and loss statement. Withdrew funds is our statement of financial position, and paid an employee is statement of profit and loss. So thank you.